Hi everyone, welcome back to Be Rich. I have Shashwath with me remotely. A lot of you have been asking for Shashwath, wondering when he's going to join me, and I've managed to pull him out of class for a little time with you guys and talk about why oil is going to why it's going, and will oil be sitting there? It's going to be sticky there, or is it going to go up further, or are we going to see a correction or slide down again? All these are interesting topics which I thought I'll ask Shashwath about. So Shashwath, what did you read?
So this is what's been happening with oil in the past few months, and I'd say even a year. So what happened? There are two big phases for oil, which we've seen. One is pre-COVID, then you have pre-Ukraine, and then now you have the current scenario with what's happening right now. So pre-COVID, oil was, there was no big volatility per se, in the sense that there was no big shock factor for oil to change up and down. It has been over the past few years. But post-COVID, we saw oil drop almost to negative numbers, the price of oil. And post that, we saw a bounce in oil prices. And in post COVID, pre Ukraine war, we saw oil, sort of teeter on the edge of an uptrend. But then post Ukraine war, we really saw a huge oil shock of sorts, because in a very short period, Russia, which actually supplies oil to different countries around the world and to the West, including India. India also takes oil supplies from Russia. So Russia is a huge supplier of oil, and knowing that Russia is on one end of this war and the West is on the other end of this war, we figured that there would be import bans and restrictions and tariffs in place due to the war, which is why we saw oil spike. And then Joe Biden came in and said, we won't let this affect oil prices. And Joe Biden tapped into the strategic oil reserve which the US had, and he spent about 300 million barrels of oil from the reserve which the US had supplied into the market. And now that card has been used. So the US cannot use that card anymore. The assumption was that with interest rates rising and the US sort of padding supply in the market with their oil, that because the interest rates are rising, economic activity is going to go down. Hence, we won't need as much oil anymore. That was the assumption. And prices did decline post the peak of the Ukraine war announcement. However, very recently, we've seen that the world economies are quite resilient. Growth has been quite resilient in the world. And we've seen that even though interest rates have risen and prices have sort of started coming down a little bit, things are nowhere near where it needs to be. There's a long way to go in terms of inflation and interest rates to go up. But the problem here is that the economy isn't slowing down fast enough. So oil consumption has shot up to a record high in 2023 of I think 105 million barrels a day. So that's a tremendous amount of oil consumption, and we haven't seen this any time in the past. So diesel and petrol are mainly diesel. Diesel is a proxy for the economy, and if the diesel consumption has gone up, it basically indicates to the strength of the world economy. And this is why we're seeing oil prices go up. Now, oil prices, why are they going up? Because Saudi Arabia and Russia were on the back foot. The OPEC and Russia were on the back foot in terms of oil prices, because they thought that demand would go down, which is basic economics. However, given that economies have been resilient and demand has actually skyrocketed to all-time highs, the Russia and OPEC have said, okay, let's cut back supply a little bit. Let's cash in on this excess demand which we're seeing. Let's push oil to $90 per barrel. And I think the long-term goal, the Saudi has been speaking about $100 a barrel for a while now. So they're going to put enormous supply pressure on both US consumers as well as other Western consumers and Indian consumers as well, because what we're seeing is a supply push inflation. And if supply is the reason why you're seeing inflation, it's a very bad sign for economy, because that signals stagflation. Stagflation is basically when you have low growth and high inflation. So this is going to be very painful. This means that the Fed is going to have to continue raising rates, because the US does not have enough reserves to be able to dampen down this price rise. So this is going to be a painful time for everything from business tycoons who require diesel for transportation all the way to the bottom level consumers, bottom of the pyramid, people like us who need petrol in order to be able to in order to be able to go from one place to another. And the thing about oil is that it's an inelastic product, because even if prices rise, the demand is not going to reduce very much, which means that the percentage increase in the price is going to be much higher than the percentage decrease in demand. What does all this mean? All of this basically means that the OPEC and Russia are going to have a jolly good time in terms of their revenue increase. And the US is going to be forced to import more from the OPEC and Russia because they've used up their own strategic reserves. So this is going to be a tough time, and the Fed has to continue increasing interest rates in order to push them out of stagflation. So the way to go out of stagflation is to increase interest rates to a point where inflation comes down. You basically kill the economy, but at the same time, inflation rates do come down, and then you focus on giving the economy a jump start. It's going to be very painful. The UK saw this in the 70s, and the US also saw this in the 70s with the oil shocks. And the famous Volcker came in and raised interest rates to sky high limits. And yeah, it seems quite distressing. And as for India, this is going to spell doom for our rupee, because now our exports are actually reducing, and as per GDP figures in the first quarter, and our imports have risen, which are going to rise even more now because oil prices have gone up, which means that even if we're buying 10 liters of oil a year, that we're still going to buy those 10 liters because we need those 10 liters. However, we're going to be paying $100 instead of $80 a barrel. So this is going to be quite tough for the Indian consumer to navigate. Yeah.
I agree, because oil is entwined into everything which we do, from transportation to our products which we use, including plastics. Everything, the base is oil. So oil is not going to go anywhere very fast. Though everyone's talking about EV cars and other things, but oil is just not put in petrol tanks. Oil is put in lots of things, even your aviation jet fuel, your cruise line ships, your transport ships. All of them run on oil, your trains. So oil is not going anywhere, and this is alarming because there seems to be a sustained price rise which is happening in oil. It's not like a blip which is happening. It seems to be sustained for the simple reason because of the uncertainties which are there tied to oil right now, thanks to the Russia conflict, like you rightly said. And US has already used up its trump card of strategic reserves. It can't keep tapping into that anymore. But US also really, in another way, also really doesn't care because they are energy independent. Yes, there is a bit of inflation in the US, which is starting to tick up because of oil prices going up. But they can work through that. They don't have to really worry about it. Because they are a free market, world oil prices pushing forward pushes the domestic prices also up. But it's not because they don't have enough oil or they're importing the oil. It's just that that's the global price for oil right now. So consumers have to bear the brunt of that. But in countries like India are going to find this very difficult. Even if we have some special relationship with Russia and Russia is giving it to us in a special rate or in agreeable terms, there's only so much Russia will also be willing to do, fork out this to India, because there's only so much India can also support Russia. Russia right now needs really strong allies who can give them a lot of free things like free arms, free tanks, free guns and ammunition. And the only person who's willing to do that for Russia right now is North
North
Korea.
Korea.
Yeah,
Yeah.
and the person who's going to benefit the most will be North Korea in terms of Russian oil. I don't think Kim Jong Un is planning to take Russian oil, process it, and then sell it to the rest of the world. I don't think that's at the
He's
end of
not.
the game plan. Yeah, so
Yeah.
this
It's a hermit
and oil,
kingdom.
yeah, and oil prices. If this is the way trend it continues, you're absolutely right. It can go and touch 100. I don't think it will go past 100. It might get close to 100 because even as beneficial it is to Saudi and everybody to have a high oil prices, it is also not a benefit for them in another way. Oil prices which go too high also affects them because immediately demand drops. If demand drops, yes, there's a product which is very expensive, but there's not enough people buying it. Just because oil is expensive doesn't mean Saudi Arabia will be immediately rolling in dosh. If it goes too high, immediately people will switch off. Things you can switch off, you will switch off. And we have seen that in the past when oil went past 100 and went to 120. It touched a few years back before COVID this happened. Everyone had immediately other things came into play. That's why fracking came into US, and that's why US became energy independent because of oil going to 120. And if oil goes to 120, India will also have to look at strategically what to do, because it will be unsustainable to buy oil at that price point. And all over Africa, they will see it. So they'll see a
Mm.
sudden forced switch from oil, which Saudi will not want. It's like being a drug dealer. You want to keep the price just about right of your product. You don't want it to be out of reach for everybody. So that being said, yes, he will aspire to keep it at 100. And end of the day, yes, he might be ruffling feathers with Joe Biden and America right now, the crown prince of Saudi Arabia. But end of the day, there's only so much he can ruffle feathers, because he doesn't have any other partners. They are frantically trying to band themselves together as a unit, trying to be friends with everybody, and even trying to say Israel is our friend now, which is a very strange thing to see. And West is China stepping in the middle of all that and saying diplomatic victory for us. We are the ones who enabled this. And all kind of crazy things are going on in the Middle East. But end of the day, when push comes to shove, it'll all go back to the way it was, the status quo which is there, because these tribal conflicts which the Arabs have run way back. I lose him. So as I was saying, the conflicts in Saudi Arabia and all that, they only get along together in the Middle East if they have a common cause or a common goal right now. And right now, that is having oil price a little higher, and each of them wanting a little more money because of tough times of COVID and pre-COVID, the financial crisis that happened in 2007, 2008, like what happened to Dubai. So they're all reeling from that, leftovers of that. So they want help from each other. So they're being friendly to each other. The minute that status quo changes and they don't need to rely on each other so much, then it'll go back to what it was before. The age old tribal differences will all crop back up and they'll all go into their separate corners. We have seen this happen repeatedly in Saudi and in the Middle East before. So I don't know. And of course, it's very hard to forecast, like Shashwat said, where it's going. But it is for the foreseeable future, at least for the next couple of months to 6, 7 months, it's going to be high. And Europe, when it gets into winters, will require a lot more heating. And all their heating is based on oil and gas. So again, they're going to run into this problem of, as I was saying, oil being at this point is not going to be helpful for the Europeans, especially when they get into the winter. Winter is fast approaching for them, and they'll have a lot more requirement for oil and gas at the time for their heating. So even if Saudi Arabia says no, we're not going to choke this oil, we're going to release some more oil. Even then, the price is going to go up further. There's no way the price is going to cool down. I don't see the price cooling down until next year, March, Feb, March, or even later, for prices of oil to cool down, unless Europe strangely has a very warm winter, which can happen.
That's what
If it has
happened
a
last year.
Yeah, if it has a very warm winter, then yes, like last year, it might be a blessing in disguise for oil at least, but not for
Yeah.
Europeans. I'm sure they would want to have a normal winter. They wouldn't want a warm winter after the severe heat wave and drought they've been going through. They would be thinking it's a blessing to have a bit of snow and rain come through them.
Mhm.
And they're having severe water shortages across Europe, Southern Europe especially. So they'll be looking forward to their winter times. Anyway, so it's interesting to see where oil is going. As far as Indians are concerned, I don't see any change in our petrol prices. It's not like if the oil drops down to $20 a barrel, our government is going to fork out more petrol
Yeah.
to us.
Then,
Yeah, they're going
yeah.
to keep it there and say, let's quickly cash in much as we can. So
Yes.
that's why most in India, we'll only see prices going up. We never see a price coming down as far as petrol is concerned.
Yep.
Anyway, this is an interesting conversation. It's something to keep an eye on, especially with macroeconomics is considered and oil is considered, and the effects of the dollar price uh, with India and Indian rupee getting weaker. This is all not good news. I don't know what the government is going to do to cope with this. I hope they're thinking positively and they're moving, uh, thinking, making contingency plans into place to prevent it turning into a bigger problem later on.
Yeah.
Anything else you want to add, Shashwat?
Nope.
So thanks, Shashwat, for joining us today. It's been
Thank
nice to
you.
catch up with you after a long break. I hope you do visit us on Be Rich a little more often. We have legions of your supporters who do miss you and who were asking me on Instagram, when is Shashwat coming back? I said, yes, he's coming back. He's just finishing his exams. So
Yeah.
we wish you all
This
the
will
best of
go.
luck.
Yeah. This will go on till the first week of October. Then I'll have some time to come back.
Great. And from all of us in Be Rich and all the team members here, we wish you the best of luck in your exams. All the best and do well. I'm sure you're preparing well for them. That being said, thank you for being with us on Be Rich. Hope you do enjoy this content and found it entertaining as always. Do subscribe to our channel and turn on the bell notification icon so you'll be notified every time we come up with something new for you. Thank you.
Thank you.
I told you that I will be in Riyadh on the 22nd of September. The event place was not fixed. The team has now decided the event. It's in the Holiday Inn Riyadh. Those who are in and around Riyadh and desirous of meeting me may contact the WhatsApp address below or the email. My team would get in touch with you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.